This lesson is set up for financial success. The objectives for this lesson are to find out about the costs of doing business, any insurance coverages you might need to carry, banks, accounting, and taxes, pay yourself and save for the future, calculating how much you should charge. When going into business for yourself, there are a lot of costs to consider. Things like rent, office supplies, utilities, equipment such as computers, printers, or any specialized equipment you need for making goods, marketing, your website, business cards, brochures, phones such as your office and your cell phone, internet access, insurance, business licenses and taxes, an accountant and a lawyer, travel and gas, even client entertainment. All of these things can be the cost of doing business. Sometimes you might need insurance, such as a general liability. Now, you're probably always going to need this. The limits will vary by state here in the United States. Health insurance, you need to make sure you cover yourself and your family. Remember, you don't have an employer anymore to offer health insurance. You need to cover it yourself now. Disability insurance. If you're a sole proprietor or a smaller S-corp, I would highly recommend you have some disability insurance just in case of any sort of problem that happens along the way. Life insurance, if you have a family, I would highly encourage you get life insurance on yourself. Workers' compensation. If you hire employees, you're going to need to have this insurance. Errors and omissions insurance. Now, this may or not be needed. It's all going to kind of depend on your industry. When you're first starting out, banking is very important, and I would highly recommend you get 4 business accounts: a checking, a savings, a tax savings account, where you contribute to that every time you receive money. You calculate how much taxes you're going to have to pay, and you put that money in there. That way you won't be tempted to touch that money. It's in a separate account. I would also recommend you have a rainy day account. And again, you're going to contribute to this every time you receive money. Maybe you figure, okay, let's put 30% of what I make into the tax savings, and maybe you take 5% and put it into that rainy day. So these are things that I would recommend when you go into your bank, set these up. Another thing you might think about is a line of credit. Now, there's usually a yearly fee with this, but it's nice to know it's there if you need it. When you're first starting out, consider using a smaller local bank. Go into the bank, get to know the manager, tell them who you are and what you are doing. Stop in periodically and chat with that manager. Let them know how things are going. It will benefit you at some point because you're going to need some sort of loan or something at some time, and you want to be able to call the manager and say, "Hi, this is so-and-so. You remember we've talked many times throughout the year. This is what's going on now. Can you help me?" So it's very important that you do that. Also, very important that you keep your personal and business accounts separate. I would highly recommend using 2 different banks. That way you don't accidentally write a check out of your business when you meant to write it out of your personal, because the checks look the same because they both come from the same bank. Definitely use 2 different banks for personal and for work. Record keeping is very important in a business, so make sure you keep up on your books. Update it weekly, if not daily. Track all your income. Track all your expenses. This is where a good accountant will come in because they can help you set up a chart of accounts. They can help you estimate quarterly tax payments. They can assist with your profit and loss and your balance sheets. And they'll help you prepare financial statements, and you may need those when you go into the bank. So you could also hire a part-time bookkeeper if that makes it easier for you. By having an accounting system like QuickBooks or something like that, you'll be able to look at your profit and loss statement monthly. You can identify trends in your income and your loss. You can look for areas where you're making money, and you can look for areas where you're not making so much money. And you can identify those areas where the costs are just bleeding money. And then you maybe look at how you can eliminate some of those costs, or at least reduce them. Look at your balance sheet quarterly. You want to find out, do you have more assets compared to your liabilities? Have assets increased since last year, or have your liabilities increased since last year? What is your AR running, your accounts receivable? Is it too much? Do you have enough in your rainy day account? These are things that the balance sheet will help you. And again, it isn't important that you know all of these things, but what is important is that you have someone who does, who can explain them to you and help you identify areas where you might need help within your business. Again, a good accountant is worth every penny. All right, let's talk about the dreaded taxes. Make sure you pay your taxes, because here in the United States, you can get big penalties if you don't remember to pay them. I highly recommend you set up quarterly taxes. Your accountant can help you with how much. I've seen a lot of businesses in my career go under because of not paying taxes, and that can affect you personally for a long time. The IRS can sometimes pierce that corporate veil and come after you personally. So again, pay your taxes. Be conservative on that too. Don't take those gray areas in the tax law, because it will eventually catch up with you. Pay any of your state taxes before the end of the year, because you might be able to write some of those off on your federal taxes. Pay online if you're required to. Many states actually require businesses of a certain size to pay taxes online. Plus, it's just a heck of a lot easier. Hire a payroll company and have them take out the payroll taxes and pay those automatically. There's a concept in personal finance called pay yourself first, and I am a big believer of this. So there's some questions to ask yourself. What is your current salary? Do you want to make more? Can you survive on less? Okay, so these are the things that we ask when we're trying to figure out how much we need to make in our own business. We also need to look at taxes, and your results may vary, but let's assume, like here in the United States, your federal taxes run maybe 20%, your state taxes maybe 5%, you'll have a self-employment tax of about 15%. So you can see this is going to add up quite a bit, right? Your taxes could be as much as around 40%. You also need to ask yourself, how much do I want to save for retirement? When you go into business for yourself, do not stop contributing to your retirement. Factor this into your salary. And the great thing about here in the United States is we can set up what's called a SEP IRA, and you can put in a lot more than the normal people contributing to retirement because you are a business owner. Remember, I talked about saving for that rainy day, having that rainy day account. Okay, this is all part of this pay yourself first. You want to keep a budget so you know where your money is going. Always look for where you can be cutting costs. Rent, phone, office supplies, things like that. You also need to set your financial goal. How much do you want to put into that rainy day account? How much extra will be in that rainy day account before you say, I've got enough in there, it's safe to maybe pay myself a little more in the form of an owner draw. You're drawing out of your business. So these are all the things you want to think about for how you're going to set the price of yourself, the price of your goods, and how much you're going to need to make within your business to support your lifestyle and your lifestyle moving forward all the way into retirement. Let's kind of walk through the steps of maybe setting your billing rate. Let's say you're a consultant and you need to set your billing rate. You need to think about how many things can affect your rate, such as what are others charging in your area that do the same thing? Do you offer a special skill that they don't? Do you maybe have better tools than them? Do you maybe have better processes than them? Have you written books, articles, or speak at conferences? Because all of these things can allow you to maybe charge more than your competition. So these are things that we use to kind of determine how we're going to set our billing rate for a consultant or maybe the cost of your goods. Now, you calculate the following. You calculate your salary, which we talked about, the costs, your retirement savings, the non-billable hours that you're going to probably spend in your business. So these are all things that we use to figure out how we're going to set our billing rate. Our retirements, all of that has to be within here. Then add on a profit to help you save for that rainy day. If you need to make, let's say, $100,000 a year to cover all of the above, add on a profit margin of, let's say, 20%. So that means we need to target making $120,000 a year. So how do we get there? Well, again, in the case of a consultant, I would figure out average billable hours per year. So 40 hours per week times 52 weeks is 2,080 billable hours. But then we got to take away for holidays, sick time, and vacations. So maybe figure 48 working weeks of 1,920 hours. But then you have to subtract those non-billable hours that you think you're going to do. So maybe 20%, about 8 hours per week. So now all of a sudden we're down to 1,536 hours of billable per year. So once you figure that out, it's simple math, right? Divide your target by the billable hours. So $120,000 divided by 1,536 hours equals $78 per hour. Round that up to about 80 per hour. Okay, will the market bear this rate in your area? If so, use that number. If not, well, then you either need to figure out where you can cut costs or cut your salary. Now, again, I highly recommend working with a professional. I've said that over and over again throughout this course. Hire a lawyer, hire an accountant, hire a financial planner to help you with all pieces of this process. Like I said, there are also free entities out there to help you, like the Small Business Administration. There's an SBA almost every city or big city that can help you with these types of calculations. In this lesson, we talked about how important it is to keep your accounting straight, how you should always pay your taxes, get a good accountant, get a good lawyer, get a good financial planner, pay yourself first, save for that rainy day. So all of these things, right, are considerations when setting your rate. Coming up next, attracting clients or marketing 101.